Well, welcome everyone to this week's podcast of Wealth Strategies Unleashed. I'm Robert Gilliland with Concenture Wealth Management.
And I'm Mike Alexander,
Chief Investment Officer at Concenture Wealth Management. We always
I wasn't going to say it this time.
So sometimes
okay.
we have to help them along. So we're getting this question a lot. What should I be doing now?
Well, the first thing you should be doing is enjoying the latter part of the summer months, and as we kick off everything from football season to the upcoming holiday season. But besides that, I think the first thing that somebody should be thinking about right now is just going back and making sure that they recheck that emergency fund and make sure that, given the rise in inflation that we've seen over the last couple of years, that they've got ample proceeds set aside just in case something should happen, something unforeseen should happen to them as we move forward.
Yeah, I mean, having that 3 to 6 months and making sure that 3 to 6 months that you put aside 2 years ago is not going to buy the same amount of goods and services today. So making sure that you have that in place. I also think that something people should be doing now is walking through and reviewing their portfolios. We've had these markets that have 2022 was a bad year in the market. 2022 felt terrible. 2023 has had times where it's felt terrible. But when we go and we turn around and we look back, wow, it's been actually a pretty good year on the indexes. And right now is probably a pretty good time to be spending time going through, looking at and reviewing your portfolio, or having your portfolio reviewed to make sure that your positions and your allocations are correct, or what you're not taking on too much risk.
Yeah, I think again, we just want to make sure when you're reviewing your portfolio that you haven't had something really run away from the rest of your portfolio, meaning that it's just performed so well on the upside that it's really out of balance relative to the rest of your portfolio, or the other side of that, which is maybe you've had something that's really just lagged significantly, and maybe it should be garnering a little bit more of your capital. So it's just a great time to be reviewing. I think you should always be reviewing your portfolio, but I think in particular when you've seen outsized moves of particular parts of the marketplace, it really makes a lot of sense to do that.
Another thing that people should be doing now, and it really hasn't changed, but I see a lot of people who are not doing it. And I've done several interviews, like with CNBC and with Forbes advisor, that one of the things, given the fact that interest rates are so much higher than where they were 18 months ago, people need to review what they owe and what those rates are. Look, let's face it, when you're going through looking at your financial plan, what you owe is as important as what you own. And the cost, if you have credit card bills that are maintaining a balance, if you have a home equity line that's in a revolving line of credit, and maybe you're not looking at that because it's an automatic payment, right? Reviewing what you owe and what rates you're paying makes a tremendous amount of sense. From there, what you have to do is develop a plan to get that squared away. The reality is that, and we bumped into this here recently, where a client was making excess payments to their mortgage that was at a 3% rate while carrying a credit card balance that was in the high teens. That probably isn't a good trade-off. The better bet was to pay off that credit card, then with extra capital go to pay down the house, and we could have that conversation. If that
Absolutely. I mean, you certainly want to think of the higher the interest rate on what you owe. That's the one that you certainly want to be able to whittle down first. One thing that we certainly have seen as well is that we're in an environment where, again, people have made quite a bit of money this year, and there's when it comes time to maybe harvest some gains, maybe that's a good opportunity to take down some of that debt as well. It's kind of a self-rebalancing mechanism, but it's just saying essentially, look, I'm gonna take some money off the top and make sure that my financial position is actually better as we approach year end.
I think that something else people should be doing right now, because I say this all the time to people, and it just doesn't seem like they get it, is that they don't get it because it's not a pressing issue. But something you can do right now is go and review your beneficiaries, right? The beneficiaries on your IRA, on your Roth, on your 401k, on your life insurance plans, if you have an annuity, things like that. Things might have changed. You may have gotten married. You may have gotten divorced. There's a lot of different things that may have happened, and reviewing those beneficiaries is vitally important because something may happen and then it's too late to make any sort of adjustments or changes.
For sure. I would take it one step further and just say that while you're reviewing beneficiaries, it's just a good time to review a lot of your important documents. So, whether it's trusts or wills or, insurance plans, whatever the case may be, it's just a really good time of the year to be able to do that. Things are calming down. As kids go back to school, as an example, there's just a little bit more time to be thinking about those things, particularly after we've gotten through the summer months.
Hold on, I've got 5 kids, and when they go back to school, life does not slow down.
That's true. That is true. Not for everyone. Not for everyone, Rob.
That does not slow down. Talk a little bit more about reviewing the insurance. What do you mean? How should you? Because as a financial advisor, first thing I think about is your life insurance, your long-term care, but it's really a lot more.
There's a lot more about that. One of the things that that I think a lot of us have encountered is you might have seen over the last couple of years that your homeowner's insurance has gone up significantly. Your auto insurance has gone up significantly. Now those may not be things that we necessarily handle here, but we certainly help advise clients in terms of directionally where they can go and some things that they need to review. But one of the things that I think we hear a lot of from folks on the insurance side is that, we've just had inflation in insurance prices, or we've had more hailstorms, or we've had more of this or more of that, and the costs have gone up. So it certainly makes sense to review some of those. And by the way, some of those kind of go back to those planning for emergencies and things. Is that, wait a minute, I set aside regular living expenses, but all of a sudden now that I found that some of my premiums have gone up significantly. And I mean, I've even read and heard instances where people, are having a hard time even staying in the home that they're in simply because the homeowner's insurance on it has gone up so significantly, or the taxes on it, or what have you. So a lot of different things that people can be reviewing in addition to
your car and your home. What's interesting, there was just a recent article, I don't remember exactly when. There's a major insurance company that is leaving the state of Florida. Mm-hmm. They're not just leaving it for homeowners. Like here in Houston, we had a lot of issues with people leaving Houston because of flooding, which was in 2017. But they're leaving not just homeowners, but they're also leaving the cars, the auto insurance. Right. It probably also because we're getting close to time for re-enrollment into Medicare and those kind of things, and re-enrollment for your health insurance. It makes sense to review what those costs are right here, right now.
You're 100% correct.
The one thing that I think that we need to spend some time on, because of how the markets have gone and exactly how this works, is people's portfolios. We have a lot of volatility in this market, and we actually believe that we're going to continue to have this volatility. You've got markets that have gone up quite a bit. I think now something people should be doing right now is going through and reviewing their tax situation, evaluating whether or not they should take gains, determining whether or not they should take losses. Because the last thing you want to do is have an investment that has gone up 30% and it turn around and drop 40% next year.
Yeah, Robert, one of the things that I think we run across a lot in periods when markets are doing really, really well, once you get to about this time of the year, it starts to make some sense to perhaps be harvesting some of the losses with the intention of capitalizing on some of the gains to offset those in the latter part of this year and mitigating a tax consequence. It also allows for that rebalancing of a portfolio or recommitting capital into other areas, perhaps that maybe that you haven't participated in. So it's not uncommon to, again, just see some review of the portfolio, capitalizing on those opportunities that you have from a tax loss, and then harvesting those gains later on to help offset some of those. Makes a lot of sense. It certainly creates a little bit of cash that becomes available to invest as well. And should we see additional volatility as we approach the end of the year, I think having a little bit of that cash makes for a pretty good opportunity to be able to put it to work.
So the just to kind of recap of the things that you should be doing now: checking the emergency fund, making sure that it's enough to cover an emergency that comes up, 3 to 6 months worth of living expenses in today's dollars. Reviewing your portfolio. Is your risk out of whack? Are you overweighted into fit bonds? Are you overweighted into stocks? Or what's probably more likely is you have too much cash, right? Reviewing what you owe and the cost of that. Reviewing your beneficiaries. Taking a look at your insurance, homeowners, those things. Are there places where you could save money? And then going through and looking at, is there any sort of tax mitigation? How do you say that? Mitigation or minimization? Mitigation strategies that you can start to go through to employ. Going through and making these decisions here and now will really help continue to keep you on the right track.
And I'm pretty sure that we can help with that, can we not?
Well, I think all people have to do is just give us a call. We're more than happy to have a conversation. One of the things, just to kind of, I'll throw out, is that I've got a client that every year, and he goes through and he takes every single one of his bills, and he goes through and he determines. So, like, take electricity as an example. He goes through and he goes through and he looks, if I change energy companies, will I save? If I change from Dish to YouTube TV or Dish to Direct TV or to cable, will I end up saving? He goes through and he looks at everything every year to see whether or not there's any sort of savings that he can put into place.
So it's funny that you mentioned that, Robert, because I have one that reviews subscriptions. And in this day and age, you got nothing but, everything is a subscription, right? And they actually go down and look at all of these subscriptions like, am I going to the gym? And why do I belong to 2 of them? Am I playing enough golf to really be, at a country club? Do I really watch Netflix that much? And what about all these other subscriptions that I subscribed to years ago that I forgot that I subscribed to, and yet I continue to see them on my credit card, and I never, you bring up a very good point in terms of reviewing some of those things. So I thought I'd throw that one out.
Sure. There. Well, that was just a bonus in the things that you can do now. Want to say thank you for listening to this podcast. We'll be back next Monday. If you enjoyed this, please make sure that you check back in with us next week. And we will hope you have a great week, and we'll talk to you next week.
We'll see you then.
All right, so let's take care of some legal stuff. As a representative of Sanctuary Securities, Inc. and investment advisory representative of Sanctuary Security Advisors, LLC Securities, offered through Sanctuary Securities, member FINRA and SPIC. Advisory services offered through Sanctuary Advisors, LLC, an investment registered investment advisor. Concenture Wealth Management is a DBA of Sanctuary Securities and Sanctuary Advisors, LLC.
This podcast is for informational purposes only and is not intended as an offer or solicitation with respect to the purchase or sale of any security. The content is developed from sources believed to be accurate. No warranty, express or implied, is made regarding the accuracy, adequacy, completeness, legality, reliability, or usefulness of any information.
Opinions expressed are subject to change without notice and are not intended as investment advice or to predict future performance. The views expressed herein are not necessarily representative of Sanctuary Securities, Inc. or Sanctuary Advisors, LLC, and should not be interpreted as investment advice.
Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit against loss in periods of declining values. Past performance does not guarantee future results. Any investment discussed may not be suitable for all investors. Investors must take their own decisions based on their specific investment objectives and financial circumstances. Consult your financial professional before making any investment decision.
No part of this communication is intended to be construed as tax or legal advice. Please discuss your specific situation with a qualified tax or legal professional.